because
Well,
they're
the
all
baby
writing.
boomers, what they have to worry about is not just the crash of the stock market, because that could happen. But what's going to be worse is if the stock market doesn't crash.
So when I look at the world and say, why is it screwed up? Why is there such a gap between the rich and the poor? Why is real estate in a bubble? You can trace much of it back to 50 years ago, August 15th, 1971. And in January of 1972, I was on an aircraft carrier in the South China Sea when because I missed the announcement that what Nixon did in August 15th. And it changed my life because I'm on this aircraft carrier as a Marine pilot, and I get this letter from Rich Dad via snail mail saying that, hey, Nixon took the dollar off the gold standard. Well, it took me 6 months to get that letter. But anyway, with that, I didn't know what it meant. Back in 1971, for those who may not know it, it was illegal for Americans to own gold because in 1933, FDR took the dollar off the gold standard. He also caused Social Security. FDR really screwed this economy up way back then. So I couldn't own gold. We didn't know what gold was. And that really changed my life. So when I look at what is going on in the economy today, I mean, let me ask this question. How in the world can the CEO of a company borrow money just to jack the price of their stocks up? That's criminal. And why is real estate prices so high? Peter is the CEO of Euro Pacific Capital and Gold, and I invest with Peter for full disclosure because some of his guys on his team at Euro Pacific Capital and Shift Gold and all the companies he has, they are professionals in the world of gold, which President Nixon took off the gold standard 50 years ago. So it's a very important show. And if you want to know why the rich are getting richer, the poor and middle class are getting poorer, our money is fake. That's what's wrong. And anybody saving dollars is a loser right now, and because they keep printing it. So with that, Peter, give us your opinion of August 15th, 1971. What happened on that day?
So on August 15th, 1971, that is when Nixon closed the gold window. Of course, when he closed it, he said it was just temporary, but it's been 50 years and it hasn't reopened. But what you spoke about FDR in 1933 is true, because that's the year when the government made it illegal for Americans to own monetary gold. So American citizens could not take their Federal Reserve notes back to the Federal Reserve and get real dollars, which were made of gold. All they could do was negotiate, circulate the Federal Reserve notes. But if you were not American, if you lived outside the United States, you were still able to take your Federal Reserve notes to the Federal Reserve and actually get paid the gold that the notes promised to pay. And so that continued up until 1971. And basically what was happening in the late 1960s, early 1970s, was we started to run very big deficits in the 1960s to pay for the war in Vietnam, to pay to go to the moon, to pay for the war on poverty, and all sorts of government programs. They called it guns and butter, and we had both, yet we didn't pay for either. And so we ran these big deficits, and the Federal Reserve was then monetizing the deficits. Now we call it QE. They hadn't thought of that word back then, but that's what they were doing. So the Fed was doing QE to monetize all this government spending. We didn't have the gold, and our foreign creditors were suspicious that we didn't have enough gold to meet our obligations. So they started to show up at the gold window with their Federal Reserve notes asking for the gold. Well, we didn't have enough, and so we ended up defaulting on our obligations, because really Federal Reserve notes were promises to pay gold, and we defaulted on that promise. And so anybody who says the US government has never defaulted on an obligation, that's not true. That was a massive default in 1971. And we've been on this fiat-based monetary system ever since. And I think this system is now on the verge of an implosion. And I think we're going to see this, relatively soon, where the dollar now collapses and the world returns to the gold standard just without the dollar, Because when the world was on a dollar standard after Bretton Woods, it was because the dollar was not only backed by gold, but redeemable on demand into gold. And after we defaulted, the dollar, lost a lot of value in the 1970s, about 2/3 of its value relative to the Deutsche Mark, the yen, the Swiss franc. But it continued to serve as the reserve, and it's a reserve currency to this day. I think that status is what's in jeopardy. Market crash or a dollar crash. They have to be prepared for either one. But the dollar crash is actually worse.
So how will a dollar crash look different than a stock market crash, Peter?
Well, in the dollar crash, the stock market goes up, but it doesn't matter that it went up because the value goes down anyway. I mean, go take a look at a chart of the Zimbabwe stock market. That market never crashed. It went straight up. The problem is it didn't go up as much as the Zimbabwe dollar went down. So, you could see the stock market going up, but if everything at the supermarket is going up 2 or 3 times as fast, you're not getting richer, right? You're getting poorer, even though you have a higher net worth in dollars. Look, there are lots of billionaires in Zimbabwe. There are trillionaires in Zimbabwe. Who cares? I mean, you're a trillionaire, but you're broke, right? Because the money isn't worth anything. So if you think you're going to retire because you got $5 million, $10 million, you don't know. What if $10 million is what it costs to buy a cup of coffee? You can't retire on one coffee cup.
So if you have a house loan or rental property loans, mortgages, and the dollar crashes, you're going to be paying them off with like pennies.
Yes, the worst thing you can be in inflation is a creditor. So you want to be a debtor. In deflation, it's good to be a creditor because the value of the money goes up, and if the borrower defaults, you get their assets, right? So if you borrow money to buy a piece of property and everything crashes and you can't pay the loan back, the lender takes the property. He's got the collateral, so he's got something. But if the dollar crashes, the lender's got nothing. He's got worthless money, and you've got a piece of property that you basically got for nothing because you don't really have to pay back the money that you borrowed because you borrowed money that had real value and you paid back money with next to no value. But the problem for a lot of people who end up owning their home free and clear is what if something goes wrong? I mean, the maintenance costs are going to go through the roof. The cost of materials, the cost of insurance, and then your electric bill, all your utilities. Things are going to skyrocket in price. So, you may not have to pay your mortgage, but your electric bill may be a lot higher than what your mortgage used to be.
That's a good point. Really good point.
Peter, I love you dearly. We argue all the time. You're fantastic. You're a source. You have a lot of guts. I'm a public commend you. You take on issues on your podcast I wouldn't dare take on. Peter and I share the same idea that in 71, the dollar went nuts. And to anybody who's saving money right now is crazy. So please listen to the Peter Schiff Show.
And let me just ask a final comment, Peter. So what are the opportunities you see for the average person? What should they be doing today?
Well, I think they should be doing, what I'm doing, what you, Robert, are doing. And that is, don't save dollars because you're just a sucker if you do that. So save real money, buy gold and silver, and accumulate assets, real assets outside the United States that pay good dividends, and that during an inflationary time period, see, you want to own companies that can immediately pass on their higher costs to their consumers by raising their prices. So you want to have businesses where the customer is going to pay the higher price, because there are some businesses where, if you raise your price, you're going to lose your customers. Or, there's a hierarchy of needs, and there are certain things that people need, and they're going to buy the things they need before the things they want. And if the things they need get really expensive, well, they have to give up some of the things that they want. So I want to own the companies that are selling the stuff that people need, because that's where you have the most success at raising prices and still maintaining, your customers. So you need these inflation hedges. You got to get out of the dollar. You got to understand the enormity of the change that is about to take place, and the profound impact it's going to have on the standard of living in the United States. But the worst part about it is, though, the political climate for this crisis could not be worse, because capitalism has never been less popular and socialism has never been more glorified. And I think a lot of people are going to look at this financial, apocalypse really that we're going to have, and they're just going to blame it on capitalism. They're going to blame it on the rich. They're going to blame it on the bankers. And they're going to say the solution is that we just have government do everything. Government needs to take control. Government needs to run all the businesses. Government needs to provide the jobs and all this. And so it's very, very dangerous, not only to be an investor, but to be an American. So, people should have a plan B or a plan C, just in case. But at a minimum, protect your wealth.
So here's a penny, it's copper. And in 1964, I was looking at the quarters and dimes, same color. Do you know what I mean? It's the same color. So basically, in 1964, dimes, quarters, and half dollars became copper. And that's what you were talking about, debasement. And I think we're paying the price for it, because I'm really glad you started with history, because macroeconomics is history. You have to look back in time. And every time people did this, first was the Chinese. They printed paper money, and the Chinese empire collapsed. And then when the Romans did the same thing, debased the currency, the Roman Empire collapsed. So when the IMF made that announcement, I was going, oh my God, thank God Raul's coming on. Because are we looking at the end of the American empire? Any comments, Kim, before we go forward?
Yes, and I also want to just mention that Raul has Real Vision. I will recommend people go to Real Vision, because that's a wealth of information, and you've got the greatest guests and greatest conversations going. But at the break, we were talking, Raul, about the timing of all of this and how fast this could be happening. So can you go into what you're seeing coming down the road?
I think it's going to happen at a shocking speed. So 1974, we went from everything looks okay to the worst recession since World War II in 4 months. I'm thinking it's going to look similar because of the speed of the monetary tightening, the speed of the rise of prices. So I think we are going to have a very ugly few months, both economically and for markets. The question is what comes next? And that's the key point. If my base case comes into play, which is the Fed pivot